Well, hello again, Maverick traders. Joe with you here. It is October 23rd. It's a Wednesday. I was with you guys yesterday, and here I am again today. But boy, interesting difference between yesterday and today. And I'd like to take some time to point that out. You guys know the drill, so let's make sure we adhere to it. I'm going to break down the meaningful news of the day. There was a lot out there. I'm going to take a look at things technically, and we are going to share our trades with the community as always.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, guys, it's going to be quite a different day than it was yesterday. Yesterday was pretty much dead flat, a little bit of a hesitation, although we did have a movement down and then back up. In this case, we had straight down, kind of just stayed down. Where do we finish overall real quick? About 1% on the Dow and the S&P, over 1.5% on the Qs. They are a little bit more volatile. Russell's down 0.89%. Oil and gold also moving lower as well. So what do I see in the daily news? Well, the markets move lower today as some big names see selling. I figured we're going to bang out a few charts today, and I wanted to show you that one as well. So E. coli scares from McDonald's. You guys are probably seeing this all over the place. Yep, it gapped down, but had a pretty a substantial bounce. We do talk a lot about the economic impacts, and I'll get there in a second, and how they can have an effect on sentiment. But if there's nothing there, there's nothing else to look for but maybe some of those larger companies in their earnings and projections. Let's get to the advanced decline line. 75% stocks down, 21% up for just flat. Still 50-50 on the above below the moving average. So not a lot of change, but a pretty aggressive reaction. But we've seen this before. What am I talking about? Well, let's just jump straight into the charts. We've been tested here before, folks, and I'm just going to outline some of these candlesticks. These bigger candlesticks, they correlate with a little bump up in volume. Let's see, here's one right there at the top. Look at the size of this volume. And today, we have kind of the same thing with the volume about, it's a little higher than average. We've seen this many, many times. And even in this stronger up market, the only thing I can do with this is treat it as such. It is a larger hammer candle, I guess, based on this shape here. It's not quite the hammer. The hammer is supposed to be 2/3 or less of the range of the total candle, but I do like this lower shadow. We did come off the lows, and we did kind of lean into this, or I should say respect, this support area, whether it was a rising 20-day moving average. We're back here end of September, early October. Regardless, folks, I don't care. I just chart. Now, that being said, the news wasn't really directed directed to the SPY. It was more specific to the diamonds, and then some worries in the Qs. But overall, the charts really haven't changed. Let's go to those Qs. And here it is. It's kind of the same idea. Let me just emphasize some of these things that we've seen in the past. There's our doom and gloom here. Here's another big old candle with high volume. This is the end of the world kind of a deal. And here we go again. Not to say that we couldn't roll lower. I'm fine with that. But is it enough for me to abandon stocks that have been working for us? I thought since I taught yesterday, I figured, hey, instead of scanning and trying to find brand new trades, let me go ahead and just revisit what my watch list has been for the last couple of weeks and ours at Maverick, and show you how little has changed regardless of some of the impulses that these candlesticks and volume movements might push us to do. I've done a lot of coaching recently. Lots of people jumping off the wagon or jumping into the trade based on some of these reactionary moves. So this might help kind of quiet that. So overall, not a lot of change, just a larger candle that has stayed within its overall range. Here's the heat map, and there it is, 75% decliners, 25 advancing, or roughly around that area. But it's not necessarily who's increasing or decreasing, it's the names. In fact, you can't even see my little red line there because it's on top of a red box. So let me go ahead and change this to blue. So NVIDIA, Apple, Meta, Amazon, Coca-Cola. Coca-Cola actually had news associated with it. But you're getting these components. Take a look at McDonald's. McDonald's is a pretty large box when it comes to restaurants, let alone the consumer cyclical. It is a big part of that. and it's going to have its impact. So things that we have to look for, but there are benefits. AT&T had a great day today. We'll take a look at that chart. Verizon, T-Mobile has earnings this afternoon. So there is good and there's bad. And what I'm seeing is just reaction. A lot of these stocks have a lot of profit in them. And hey, if you're worried about something, a lot of traders are taking money off. At the same time, if you get good news, GE was another one that was, Philip Morris. Philip Morris was another one that was up 10% yesterday and, is still up there. So it's just moving profit around. It's moving money around. There's nothing that's falling apart. There's nothing that should be changing your mind. That's why we have to just kind of ignore all the noise, ignore the headlines, and chart. Yeah, I understand. There's a whole lot of political stuff coming out, and I am seeing a move to defensive playing. I'll get there in a second as well. So how do we finish overall? Well, what's my market outlook? It hasn't changed. I kept it as a +1. Yeah, sure, we have a little bit of a scary candle here. It looks like it's a darker red, a little larger with some volume, but overall, folks, it is still in this pattern, and I am not going to change that. I'm staying at a +1. I've seen way too many times where the markets decide to flip right around and go back up. Now, if they don't, that's fine. If they don't, that's fine. But, I may get hurt a little bit, but what's not going to get hurt are my bears. So to make any sort of impulsive, irrational decision based on emotion is not a good idea. That's why we have trading plans. So what would be fun? I thought this would be fun. These are the trades that I have posted personally. These are trades that I'm looking at and have traded. Trades that Ankit, Corey, and myself have been talking about, I think since midweek last week. And I just put all the bulls and the bears together. And I thought it'd be kind of cool. Let's just bounce through them. And let's also take a look at some of the ones that are impacting. So a little bit different than what you're used to. But folks, hey, if I'm doing back-to-back end of days, I want to make it fun. So first off, let's just jump straight into a chart. This is a FinViz chart, and we're going to start with JLD. I talked about this yesterday. It looks really good. I like the candlestick a few days ago, or the last week when I talked about it first time and yesterday. And yeah, it's pulled back a bit, but it's still in its nice chart. Let's take a look at our next bull. I'm gonna bust through these pretty quick, folks. So UAL, let's take a look at United Airlines. I believe this was a couple of days back. Nice ascending triangle back. Beginning of October, it broke out, huge move, but a high base. So it's still staying up there. It does feel extended. It did have its earnings. Now, folks, a fun thing, if you have FinViz, which you all should have, you go ahead and just click this and it'll tell you how it did. Its earnings reports, the forward projections, and they call them the conference calls. Has a lot to do with some of the reaction. But so far, this has stayed pretty strong. Let's jump over to CVNA. So this is Carvana. Carvana's been one that's outperformed. High base. We'll pull back here, high base, breakout, high base. Looks like it might be sliding higher. Still a great trade for those of you who've been in it for over the last week or so. If not, another bullish candidate. Let's jump to our next trade. This is Hood. Here's Hood, same idea. Nice high. It came up high-based after one of my favorite patterns. I like it when they correct. So when you set a higher high and a higher low, you get this nice, easy drawable channel, don't you? And you expect it to kind of base and break out. What I mean, one of my favorites is this. So it climbs back up. I'll draw my own arrow. It climbs back up to this area with a higher low, and then another higher high. But this higher high is back to areas we've seen in the past. This candlestick is just beautiful. Nice breakout, high basing. Looks like it could climb a little bit higher. So still looking good, and it's still a candidate. I actually threw in a couple of sideways trades. I liked QCOM. Qualcomm was nice. It's sitting within a range. Be careful, folks. We could be approaching earnings on this, but Qualcomm is playing with this 176 number that it was dealing with. The beginning of spring last year. You guys can see back here in March and April. But I do like the support at the 58. Now, that's a huge range, but you could tighten it up. I can see some consolidation around 60, 164 in that. And you could do it shorter term. But it's still holding its pattern. It still looks good. It's still a feasible trade. Another one is XLE. The XLE is obviously the energy sector. I personally thought this was going to be a little bit stronger. A little bit of a corrective move to the downside, but it seems to be comfortable right around that $90 level. I'll draw a line straight through it. How far above and below you want to be from that really depends on you. I see justification here. This is previous 91 back in August. I see some support back through here where you've got mid-August, early July. It's just kind of how long you want to keep it sideways and kind of what you're looking at. Now, ETFs should be a little easier to trade because they're not too specific to earnings. However, you get a surge in the energy sector, and this thing will definitely start to move higher. Obviously, Adobe, one that I've been looking at for a couple of weeks, trade that's been wonderful. Traded it a couple of times. Opportunities to break here, opportunity to roll over here. And guess what, folks? It's just about breaking the descending triangle that I was talking about yesterday. So Adobe still looks good. Moderna's been on the list for a while. Talked about it 2 weeks ago. I talked about it yesterday. Still looks good, just bleeding lower. Merck. By the way, folks, pay attention to where these are, right? Adobe's a tech, Merck, Moderna, kind of in that pharmaceutical drug area, healthcare. But I like the break that it had a couple of days ago. It was really nice. It might have an anemic bounce or move sideways, but it's still looking very weak. CNC, here's another one. This kind of gapped and fell. Here's something. Let me move this over. Here's your earnings. So if you click on that, it'll tell you. So it's got earnings on Friday before market open. If you're not in this, this might be one to avoid just because it's fell so hard. Now, if you are in this, unless you want to keep it over earnings, that's a pretty darn good move on the bear side. If you've got profit in there, you might want to either protect it or just dump it altogether. Okay, so let's take a look at the last, just a couple more. GIS, whoops, sorry, let's try it again here. Here's GIS, General Mills, right? It's been rolling over. This one was difficult because this was breaking trend, right? This was kind of the level that we wanted to see break first. And it did it. It didn't really even have too big of a pullback. It was just one shooting star candle. But boy, it fell out of favor pretty quickly. Still looks like it's a pretty good bear trade. We might get a pullback at some point. So if you're not in it yet, you might just want to sit on the sidelines. And then the last one that I liked was Altria. Great place to be, great sector. I love the crossover. It's not falling apart fast, but boy, it's got that nice slow trend here. It's in the midst of a bull pullback. If it could stay below that 50 where it's at, it could roll over. Be a good place to get into it. If not, you could wait for it to come back and maybe break that 49. Now, when these do break, you can see it doesn't go too far. So something diagonal might be a better play on that if you guys don't already have it. So I figured that'd be kind of a fun thing to go through. Let's take a look at some of the big movers today. This is McDonald's, right? There's McDonald's, down 5.12%, but take a look where this thing opened. It opened down here, came all the way back to retrace up at 298. So it was down at 292 and it regained $6 just in the bounce itself. That's what's causing this. Here's 3M. 3M actually had a surprise on both their revenue, their numbers, and their earnings per share. But the projections and worries for weakness moving forward. It's down another 2.5 or 2.9%. But you can see this gapped up. It was, hey, good news. And it just immediately got sold down to. What's a real interesting thing to take consideration of, folks, is it really didn't change its pattern yet. It really hasn't. It's just been a huge push-pull and kind of created some turmoil. Some of the other bigger movers, here is Philip Morris. This is one, it was up over 10% today or yesterday, and it just closed flat today. So it's holding in there. Here's GE. I mean, these are giant pieces of that heat map that are really going to cause a whole lot of big down days that really don't go anywhere, right? So inside day to day, that's a bullish Harami pattern. So maybe it stays where it's at and moves higher, but didn't even get below its 50-day moving average. Verizon, another one that missed. It came back down and it's climbed right back up. This was down over 5% yesterday, and it's up 3.28% today. So it's climbing up. Here's one that came out. This is AT&T. AT&T seems like they did pretty good. Oh, here's the best. So beat the earnings per share, less revenue. Overall, folks, it's up 4.6%. Lockheed Martin, another big one, down another 1%. This was down 6% yesterday. This is all off earnings, but not a lot of change in their overall trend. And then another one that I thought was pretty big was Sherwin-Williams. Down over 5% and put back on, 0.37%. So still at a support level. So a lot of this move is reaction to earnings, and I do believe that is going to continue to cause the push and pull if we stick with the stocks that have been working. Is the whole point of this little end of day here, folks. If we stick with the stocks that are working, we quiet the noise. Don't worry about our outlook politically. Don't worry about, the reactions day to day. and just follow your plan. Let's finish this up here. So let's just call this a round of selling across many different areas because that's what I saw. Now, we do see the 10-year rate continuing to creep higher, and it has since basically Friday of last week. It was at 408, and it's at 420 something or 4.2 something. So it's moving higher. Now, that to me is just an implication of a reduction in exposure. Let me get some money out of these high flyers. Let me hit the cash register. Let me pull some gains off the table and put them into a money market account or a CD or buy some bonds. Or they're just moving money into it. That's kind of how I see it. I don't think the Fed's going to be as aggressive, which should stimulate a round of another investing into the markets, which is why the sentiment is still bullish. So we're in this fun area where there's no reason to sell. There's some caution moving around. We've got the political things going on. And so the only thing we really have to go on, because the economic numbers are coming in pretty flat, pretty stable is a good word, is individual earnings. So I should expect that to continue. What do we got left? So existing home sales, by the way, in line with expectations, right in line. Jobless claims, services, and manufacturing PMI, I don't think that's going to be a factor at all. But earnings have been a main driver, especially in the big movers, right? Good news, they can gap up, go down. Bad news, they can gap up and slowly climb up. Look what we got. Tesla, T-Mobile, IBM, Lam Research, O'Reilly Auto Parts. Who thought an auto parts store would be $1,200 a share? But there it is. And then Newmont Mining. It's exciting, but there's really not much going on. If that makes any sense, I hope it does, because if you stuck with your top-down approach, strongest to weakest, and I wanted to give you the example of the trades going around the community here, folks, for the last 2 weeks. They're still working. We have the advantage here to continue to play strength and weakness. So I hope you're taking that into consideration and using that to your advantage. Following your plan is going to keep you out of a lot of trouble. Thanks for joining me today. It was a fun one. Talk to you next time. Bye, folks.